State and local governments plan to issue $11 billion of municipal bonds this week, marking the busiest week for munis since April. Puerto Rico leading the way with $4 billion of bonds. Hawaii, Washington, Texas, and 2 New York agencies also planning to tap the market, which has been outperforming treasuries this year by a wide margin. Joining us now is John Miller, Chief Investment Officer of Nuveen Asset Management, which runs $65 billion worth of muni assets. John, let's start for this. How strong is demand expected to be? You've got a ton of supply coming to market this week.
Supply appears to be solid, but also the demand side of the municipal bond market is very strong right now. We've seen consistent cash flows into municipal bond mutual funds, and those cash flows have been accelerating. So I think the deals this week could be poised to go well.
Now, I was looking at muni returns. It will, I am certain, surprise some people to find out that munis are up about 8.5% this year if you measure it by the Merrill Lynch Index. Best year since 2002. How much longer can this performance keep up?
Well, some of that return is based on the fact that munis were overly beaten up, particularly in the fourth quarter of 2008. But also some of the other positive features are a return and influx of liquidity, an influx of cash flow into municipal bonds, the expectation that both federal tax rates and state tax rates are likely to increase. So people are still needing tax-free income and therefore looking to the municipal bond market in the fixed rate side.
John, we saw Guam come to market last week, a low-rated muni issuer, sell well. What does this say about the prospects for some of those other low-rated borrowers in a market like this? Will they be able to succeed similarly?
Sure. I mean, it's a very case-by-case analysis, very much of a bottoms-up process that is necessary in the lower-rated muni space. But there are a number of very favorable stories and developments that can be picked up at attractive yield levels. Guam only has a rating on the GO of B+, but there are still some favorable attributes that are going on there with an increased U.S. military presence, for example.
John, you mentioned some keywords, case by case. You hear about that quite often when you talk to people about munis. You can't broad brush stroke it. You have to be very, very selective. But in general, though, are munis not susceptible to the kinds of economic pressures we've seen hurting treasuries?
Well, they are susceptible. However, many municipalities, even the smaller issuers, as you mentioned, that might have lower ratings, many municipalities provide essential services. They have very consistent demand. They're natural monopolies and have inelastic demand. For example, water and sewer systems, electric utilities, and general obligation bonds provide services that are needed in an economic expansion and in an economic recession, so they don't vary as much in a downturn.
Who have we seen lately buying in the muni market? Is there any one group of investors that accounts for most of the increase in demand?
Individual investors, medium and upper income investors are the greatest beneficiaries of the municipal tax exemption, and they have been the most consistent buyer, both in terms of buying bonds directly and also buying bonds through products, open-end and closed-end funds, separately managed accounts, all seeing positive interest from individual investors because they're the biggest beneficiary.
John, before we go, want to get a sense from you on what you would recommend to people. Obviously, again, you can't generalize, but are there any states, any regions, any municipalities that you think offer a good bet relative to current pricing?
Well, specifically, there are the cheapest trading states create the environment where bonds might be picked up at levels that are cheaper than what their fundamentals would suggest. So, for example, California is, of course, beaten up by all the negative press they have around their general obligation credit, but there are specific issues within the state that may be more resilient. Similarly, Texas and Illinois, Florida, Michigan, those are states whose municipal bonds have been trading cheaper, and there are individual names within those states where value can be achieved.
All right, John, I want to thank you very much. John Miller, Chief Investment Officer of Nuveen Asset Management.